It all began with an unassuming decision, one that would ripple through time to shape the very fabric of our modern world. In the heart of Montgomery, Alabama, a small dry goods store named H. Lehman opened its doors in 1844, founded by a German immigrant named Henry Lehman. Joined by his brothers Emanuel and Mayer, this humble family business, later known as Lehman Brothers, embarked on a journey that would see it evolve from a simple cotton brokerage into a towering colossus of global finance. For over a century and a half, Lehman Brothers was a symbol of Wall Street's enduring power. It weathered the American Civil War, survived the economic devastation of the Great Depression, and navigated 2 world wars, each time emerging stronger and more influential. The firm became a cornerstone of the financial world, a testament to resilience and ambition, seemingly too big, too old, and too powerful to ever falter. The dawn of the new millennium brought with it a seductive high-stakes game that Lehman Brothers couldn't resist: the subprime mortgage market. Fueled by an insatiable appetite for growth and profit, the firm dove headfirst into this lucrative but volatile world, betting heavily on real estate-backed securities. The gamble paid off spectacularly at first. By 2007, Lehman was riding an unprecedented wave of success, its profits soaring and its stock price hitting an all-time high. It seemed the Titan had found a new, inexhaustible source of power. Yet beneath the glittering surface of record-breaking earnings, the foundations were beginning to crack. A quiet, then growing chorus of defaults on these risky subprime mortgages began to echo through the market. The first tremors of an impending earthquake were being felt, but for many at the top, the music was still playing. Then came 2008, the year the music stopped. The tremors escalated into a full-blown seismic shock as the housing market imploded. The value of Lehman's massive portfolio of mortgage-backed securities plummeted with dizzying speed, erasing billions in assets almost overnight. Panic gripped the firm and spread like wildfire across Wall Street. A frantic scramble for a savior began, with desperate high-stakes negotiations for a buyout involving banks like Bank of America and Barclays. But as Lehman's toxic assets became clearer, potential rescuers backed away. All eyes turned to the U.S. government, the lender of last resort. In a decision that would define an era, Washington refused to intervene, drawing a line in the sand. The final dramatic moment arrived in the pre-dawn hours of September 15, 2008. With no lifeline left, Lehman Brothers, a 158-year-old financial institution, filed for the largest bankruptcy in U.S. history. The fall of Lehman Brothers was not just the end of a single company. It was the trigger for a global financial cataclysm. The bankruptcy sent a shockwave of fear and mistrust throughout the world's interconnected financial systems, freezing credit markets and sending stock markets into a freefall. The domino effect was swift and brutal, plunging the global economy into its most severe crisis since the Great Depression. The story of Lehman Brothers became a cautionary tale for the ages, a stark reminder of the dangers of unchecked ambition, systemic risk, and the illusion of being too big to fail. Its collapse forced a painful but necessary reevaluation of financial regulation and risk management worldwide. Today, its legacy serves as a permanent monument to how quickly a titan can fall and how a single flawed decision can reshape the destinies of millions, reminding us of the delicate balance upon which our entire economic system rests.